Hello, good morning and welcome to ET Now's a newspaper show with me, Varun Hiremat. Before we go any further this morning, let me remind you that any rumors circulating about the newspapers not being safe are completely false. All our personnel at the presses are following the strictest norms, whether it be sanitization or social distancing. So if you are interested in your newspaper being delivered to your residence, please go to wantmypaper.com and explore all the options available for the same. With that being said, let's get a move on with the headlines for this morning. The first story, Hetero, Cipla to supply Remdesivir to hospitals. Favipiravir to boost Glenmark sales. Demand scenario to be clearer by September quarter, that's HUL. Chinese goods, trade pacts under lens. Exports attracting investment focus areas for PM. E-commerce sales back at pre-COVID levels. Hind Zinc looks to sell wind energy assets. India to urge Russia for faster S-400 delivery. Trump to sign order curbing H-1B visas today. Delhi containment zones to be mapped again coming out from the MHA. Let's now move forward to the corporate headlines. Chinese auto companies to employ locals at Indian units. China vendor ban may hurt Airtel and Vodafone Idea. Oppo runs its Noida plant at 30% capacity. Coke to tweak business models to adapt to new normal. And startups soften pay cut blow, expand SOPs or ESOPs, sorry. Let's now move forward to the market headlines. Corporate bonds get a lift with demand revival. Mumbai high-rise homes selling at cheaper rates. Government support boosts bank lending to MSMEs. Technical indicators hint at more upside for RIL. And investors face DMAT hurdles in closing FDI deals. So those were essentially the top stories for this morning from the various brackets. Let's now bring on board my colleague Pankaj, who tracks the pharma companies and sector very closely. It seems that Hetero Labs and Cipla will start supplying generic Remdesivir this week, primarily to hospitals in Delhi, Mumbai and Chennai. Good morning, Pankaj. Welcome to the show. Please update us on this development.
So, this is a development which was largely on the expected line. When we look at Cipla and the news flow that is coming in, generic Remdesivir is something which they have launched, and they have also got an emergency approval which is coming in from the Indian authorities, which means that they would also be supplying into the Indian authorities. We are also expecting that Cipla would come out and speak today evening regarding this particular launch, both in the US market as well as in the 3 Indian cities that you just pointed out. Remember, this is a drug which is, taken by, or rather Cipla has a manufacturing agreement with Gilead, and that is something which they are looking to go ahead and supply it. But this is largely for mostly serious patients in the COVID, not so much for the mild as well as the moderate patients. So let's wait and watch what is the sort of demand that you see for this drug. But overall, on expected lines, it was expected that this would come in, and Cipla has received an emergency approval on this weekend for going ahead and launching this particular drug in India. They have also launched into US. In US, they got an approval coming in about 2 to 3 weeks back, but I think yesterday night is when they launched that drug into US.
Thanks, Pankaj. Do you also have any take on Favipiravir, which has been given to Glenmark?
Well, that's actually an interesting one, Varun. So that's another antiviral drug that we are talking about. And when we just talk about that drug, it's similar to HCQ or, similar as an antiviral property that any other drug would have. This is a drug, which essentially people knew about. There is not a lot of trials which have happened globally. I think Russia is the one which has done a decent big trial. This drug has come in originally from Japan. At this point of time, they have launched at almost 100 rupees a tablet here into India, but this is the first big approval that Glenmark has got for this drug. So that will be an interesting one to see going ahead, that any other major countries would go ahead and approve this drug or not is something as the next catalyst to watch out for. As of now, 50 crore is the sort of estimate that Street is looking at for Glenmark.
Okay, Pankaj, thanks for letting us pick your brains early in the morning. With that, we'll now let you go. Thank you so much for joining in. Let's switch gears a little bit to Zuari Agro. Now, there's some stake sale news coming over here. Basically, it's a fertilizer company, and it's also got a JV called Paradeep Phosphates, which is with a Moroccan company. Now, the main Zuari is bound by debt. They have a lot of debt. So they're going to be selling their Goa fertilizer unit to their JV company only, which is PPL, for 2,135 crore. This will help them to pare down the debt in their company, and it's a really good asset which will give PPL a strategic advantage. It will make PPL one of the largest fertilizer companies in the country. It will also give them capabilities both with phosphates and the nitrogenous part of the business, which was previously missing. So it's some stake sale news. It should keep Zuari Agro in focus today. Unfortunately, PPL is a JV and not listed, so we can't gauge the impact on that. But do look out for Zuari Agrochemical. Let's move forward. The next story is from Jayesh, my colleague. I believe he's now with us. Good morning, Jayesh. Welcome to the show. Zerodha's 60 to 65 crore ESOPs buyback plan values the firm at $1 billion. So what's your take on this?
Good morning, Varun. So this is the most exciting company that, a lot of people actually look at because it has become India's largest brokerage house, and it is also going to complete 10 years of business this year itself. And that's the reason we are seeing this kind of news, because what we gather is, they're going to spend about 60 to 65 crores to buy back their own ESOPs that they have given this year itself. And they have made a self-assessment enterprise value of the organization, which stands at nearly 7,000 crores or $1 billion. Now, this is the first time that a valuation is actually being officially ascribed to Zerodha, which, of course, they have never picked up external capital. So that's another, exciting thing for the company as well. Just to give you a sense of, how big the buyback is, the ESOP is about 60 to 65 crores that they're going to buy back, which gives it a book value of about 170 rupees per share. And, the buyback value per share that they're going to offer to the employees is around 700 rupees per share. And that's the reason they're giving it an enterprise value of about $1 billion. So, one of the most exciting companies in the fintech space, actually surpassing the $1 billion mark.
Thank you for that, Jayesh. It's really interesting to see what's happening with these low-cost brokers. If you just look at Robinhood and all the traction in the States, one can see why these companies are viewed from such a exciting angle as far as valuations are concerned. So thank you for joining in. But let's switch gears yet again. Another colleague of mine, Vivek, is now joining in. And there's a lot happening in the real estate sphere. It seems that Mumbai's residential property market is the country's most expensive, but has now started to crack amidst the COVID crisis. So good morning, Vivek. Welcome to the show. What cues are you gathering from the real estate scenario?
Well, good morning. So ever since the start of 2020, earlier we had the slowdown, and then after the pandemic and post the lockdown, multiple webinars, multiple people, especially a lot of noted voices like Union Minister Piyush Goyal, Nitin Gadkari, and even, own industry experts or industry veterans, both Deepak Parekh as well as Uday Kotak, all of them had started calling for real estate prices by developers to start falling down or to start coming down, for the simple reason that the inventory in the system was very high, and they believed that it would be impossible to go ahead and liquidate inventory unless prices were reduced quite significantly. So now what the Economic Times is reporting today morning is that there's been a significant amount of real estate rate reduction. They're saying almost 8 to 12% reduction as far as micro markets is concerned, and luxury is seeing an even bigger dip with almost a 15% reduction. So now what is actually happening is that, when you're talking about developers as well as, home buyers who always seek affordability, most of the brochures continue to have the same amount of rates. But what they are saying is that in case there is a deal that is likely to happen, developers are seeing, are quite willing to go ahead and offer significant amount of discounts. Now, this is good news as far as both home buyers is concerned as well as lenders are concerned, given the fact that a lot of them are worried about some of the smaller real estate developers folding. Overall, some positive news flow coming in, and it'll be interesting to see, how much the price is actually correct and whether this is the floor or whether prices can go steeper floor.
Right, thank you for that, Vivek. For all our home buyers out there, seems like you may be getting some discounts, so keep an eye out for that. Okay, I'm going to walk you through the next two stories myself. The first one is about the Hindustan Zinc asset sale. Now, according to an Economic Times report, Vedanta Group is looking to sell its assets worth around 1,500 crore rupees in Hindustan Zinc. Now, this is in order to help them finance the parent company's delisting process. Also, the wind energy assets have been put on the block. So, two renewable energy players are said to be vying for the business. These wind power assets are in Rajasthan, Gujarat, Maharashtra, Karnataka and Tamil Nadu. Vedanta will need around $2.5 billion to finance the delisting process. So still a long road ahead for that, but this will definitely point them in the right direction. Page 8 of the Economic Times, do take a look if you're interested. The next one is about Blackstone and IIFL Wealth. Now, there's a buyout in the works where Major Blackstone and IIFL Wealth are among the top bidders to acquire L&T's mutual fund business. Now, L&T's mutual fund business has assets under management of 71,000 crore. So it's a very large mutual fund. Even as they look to line up backers to strengthen their plays. Now, while IIFL has roped in Axis Capital to help finance options for its bid, Blackstone is working with top law firm Cyril Amarchand Mangaldas to strengthen the case before the securities market regulator SEBI. So you're looking at a 4,500 crore deal size possibly over here. And Carlyle and Chris Capital have also apparently expressed interest in this deal. So quite an interesting one. Page 13 of the paper. Do have a read if you're interested. Okay. We're looking at the system rush delivery. Okay, so India will press Russia to consider expediting the delivery of the S-400 Triumph anti-missile system during Defense Minister's 3-day visit to Russia. The urgency comes amid heightened tensions along the India-China border, as we all know, which enjoys strong defense ties with Russia. They've also acquired the S-400 system, and this fact may have added to India's concerns. China I'm talking about. And besides this, reports suggest that armed forces have been told to be ready for all eventualities. The government has begun the process of filing up gaps in the defense preparedness. So, I'm not really going to add too much on that. We all know the India-China trouble that's going on, and we're just looking to shore up our borders on that front. Okay, moving forward, I think we have Vinny with us regarding the fact that Chinese automakers are playing it safe with their India strategy. Good morning, Vinny. Welcome to the show. What does this story mean? Take it away.
Automakers with the Chinese pedigree are playing it safe with their Indian strategy. Now, company feel that it's in the best interest to recruit more Indians over here, and this will keep the sentiment also at good as well for the people. Now, these companies are filling in the positions of factory floors, boardrooms, predominantly with Indian, but this was there even before the current situation on the India-China border, what is going on. Even before that, there were a lot of Indians. Now, in MG Motors, it is said that, the full-fledged operations in India has 99.5% Indians on their payroll, and it is even its heads and all, most of them are Indians in the Indian units. Now, Great Wall Motors, Photon, BYD, which are at the various stages of entering in India, are also adopting this similar strategy of having more Indians on their payroll. And the companies feel that it will be better, best interest to recruit more Indians currently, and even otherwise, as it is more local for the people as well. Even Great Wall Motors of Pune factory has more than 90% of its people who are Indian, and with only few people at the critical position who are still Chinese, who are Chinese employees, who are headed by Chinese, but they understand that the local understand the customers much better than Chinese people. So that's why they need more local people as well, and that is what is they're playing as a strategy as well. Now PMI Electromobility Solutions also said that as they have 70% of the participants in the JV, there will be more locals with Chinese only being there for technical support. So this is what is the play they're playing by recruiting more Indians.
All right, thanks so much for that, Vinny. And along similar lines, on page 1 of the paper this morning, India is really looking to plug the loopholes as it seeks to reduce import dependence on China. The routing of Chinese goods to India through their common trade partners, inversion of duty structures, and the exploitation of ambiguities in origin rules have all come under the government's scanner. Now, under this particular government scanner, focus on SAFTA, APTA, ASEAN and other pacts, inverted duty structure on the radar, steps to correct inverted duty structure. China has invested in Vietnam, and stricter scrutiny of rules of origin of goods. So these are the kind of things to eye out for as we look to be a more Atmanirbhar Bharat. All right, moving forward, page 5 of the paper, we're going to talk about Coca-Cola a little bit. A top Coca-Cola executive said that any immediate consumption outlook in India may not be complete or even conclusive as the viral pandemic hurts the supply chains and last mile deliveries. So basically what he's saying is that there's no guidance available. There's also been acute workforce shortage. T. Krishna Kumar, president of Coca-Cola India and Southwest Asia, told ET that while all businesses have been significantly impacted, the Indian unit is witnessing improvement in both consumer sentiment and consumption. So we're hopeful of a recovery there, and we'll be seeing what happens. Okay, let's take it forward now. My colleague Chandra is with us. Good morning, Chandra. Welcome to the show. You have 2 stories to walk us through this morning. The first is pertaining to e-commerce industry recovery, and the second is Trump on the H-1B. So why don't you take it away and start off with the e-commerce story.
Hi, Varun. Good morning. So some good news on the e-commerce side. The good news is that e-commerce volumes, sales are back to pre-COVID-19 levels as far as volumes are concerned. But the story is obviously different in terms of value because consumers continue to avoid large ticket purchases in the wake of economic uncertainty. But if you look at it, the volume jump in recent weeks has been led by significant uptick in sales of electronics, excluding phones. This is according to data from Unicommerce. So this includes items such as computer accessories, trimmers, Wi-Fi routers. All of them have grown very well. There is also an uptick in fashion sales. It's picked up by 70%, with kids wear driving a major part of this. And eyewear sales are also at 70% higher. Cosmetic sales have been going up. To Nykaa has also been seeing a lot of interest. So these are some of the categories where, at least volume-wise, there's been a huge surge. So it's not just the pent-up demand that we saw in the first few weeks of Unlock 1. Clearly, there is some stickiness here, but important to mention that the overall value has come down, though the volumes have picked up. Now, as far as the second story is concerned, Varun, this is important for the IT industry. It's something that we've been tracking for the last few weeks. U.S. President Donald Trump, in an attempt to reduce unemployment in the U.S., is planning to suspend H-1B visas, L-1 visas. Some people say that he could be suspending it for the rest of the year. Now, this is a popular work visa used by IT companies. So if they have employees on these visas who have come back to India during the lockdown, who want to go back, they cannot go back. And if they were hoping to get some fresh visas in October, which is when the U.S. typically issues such visas, that's also not going to happen. Of course, we do not know the details as yet. This is going to be an executive order, but in terms of the fine print, that's likely to come out tonight or tomorrow morning. But this is yet another attempt by Trump to really play to his voting base. But the reality is that IT unemployment in the U.S. is really low. And H-1B workers account for less than 0.5% of the overall workforce. So we have to wait and see how companies deal with this. They have been employing more locals in the last few years. So overall impact is something that we'll have to wait and see. But this is an important development to track as far as the IT industry is concerned. Back to you.
Thanks for that, Chandra, bringing us the latest on that. I'd say another major concern coming out of the H-1B threat is more also for foreign remittances made to India by these employees who, if they lose their jobs, might hit our foreign remittances as well. But thank you for joining in. We're almost at the